Good evening, YouTube. Melvin Quant Geekery. This video is more about the secondary market of comics and also why I have never become a comic book collector. And the reason is from a biz industry standpoint, the floppy comics market in the primary market for end consumers, like people that are actually going to consume comics, is not in decline. It is a terminal market from a business strategy perspective, from an industry analysis perspective. It is a terminal market. That doesn't mean that comics are dying. That means if your interest is as a speculator and not necessarily a collector at the end, but someone who's going to participate in the secondary market with an expectation for positive return, the comic market is terminal, which is basically you're eating off someone else's plate. Someone is the only way you're making money is if somebody else is losing money. It is a negative. It's a zero to negative sum game. That if you add up all the people that are going into it, you're going to end with more people losing what they're putting in than getting something out. Which, at first you think that's not possible, but then you understand that there are people who just are never going to connect to a seller. So they buy it from the primary market, and their interest is not to consume it, and there's just no one at the other end, in which case it is a total loss. And so, unlike the case where you can say, "Oh, whoever you bought it from is getting a profit," not necessarily. Um, when I say this, there are often many apologetics in the comic book news space, especially Comics Beat, where the argument is that the industry is dying, and that's not patently not so. Um, I'm looking at this from a business perspective. It's a terminal market. Um, the peak in floppy comic sales was not in the 1990s. That was the peak in direct market comic sales. But you're not getting millions of dollars for X-Men #1. They are still chuds. Those are still chud books. You're getting millions of dollars for Detective Comics 27. You're getting tens of thousands, $100,000 for Detective Comics #1. You're getting millions of dollars for Action Comics #1 because the peak of the market happened not in the 1990s. The peak of the market happened in the 1940s and 1950s. You had a point where the estimates were up to 8 billion comics being sold at a price of about 10 cents. Now, that 10 cents works out to about $966 million in revenue in the 1950s in equivalent dollars. Like, right, 2023, the equivalent dollars is over $1 billion. That is the reality. When I say that a market is in decline, that means that the expectations are that the sales are never going to get back to what they were at the top. And when you are a person interested in the secondary market, the farther back you go, the more money there may be. Therefore, you are using the full history. We're talking the first original content for New Comics was Detective Dan, 1937. So you've got 80 some years, like a little old. It's a like Detective Dan came out a couple months before Detective Comics #1, and Detective Comics #1 already had work from Siegel and Schuster in it. So that's just giving you some sense of the actual time frame that someone with a collector slash ideating speculator had was on it. So the next defense, I had to have these things listed, right? And first is always people saying the comics industry has been dying since the 40s. Yeah. Um, are they selling anywhere near 1 million units to consumers? When I say 1 billion sold, I'm not talking sold and returned. I mean actual end consumers. That's what was going on. They printed a whole lot more. A lot of them were selling hundreds of thousands They were selling, 300,000 to end consumers, but they were printing 700,000. Well, because of returnability, they just went out of business. That's what I'm talking about. From that perspective, no. By units, you measure the prospects of an industry by the quantity sold. And if you expect the quantity to be lower than what it was at its peak and that it's not going to get back there, it's a declining market. If you think that from a given bandwidth of its peak volume, that it's not going to break out of a particular band of sales, it won't go below and it won't go below above. If that's the case, it's a terminal market. So, I my rule of thumb is not orthodox. It's not based on my report or anything like that. I take the highest point of highest sales, have an estimate on what the margin of error is, double that margin of error at the peak, and say, is it going to break out of that above or below? If it's not going to break out of it from below, I don't think it's going to be a declining market. So I take where it is at its low point, I apply that margin, and if it's not going to break below, it's not in a declining market. If I don't think it's going to drop that low, it's not a declining market. If I don't think it's going to break above, I can't say that it's going to be a healthy market. I don't think it's going to ever recover. If I don't think it's going to recover back above, in this case, the peak was 1 billion sales. I think the margin of error might be like 50 million. Double that, I'd say I guess you could consider the Bollinger Band is going to be locked in at 100 million up or down. I don't see it dropping. I don't see comic sales ever going negative. I definitely don't see them going to like 160 or 200 million. Not in my lifetime. So it's a terminal market. Now, people might say back in the day, when they were selling, 1 billion comics at 10 cents, I mean, how could comic creators feed their families? Well, considering that even black comic creators had page rates that were better than most creatives that weren't working at the big two, they could do a pretty daggone good job. It's when the sales went down at that 10-cent price point that the page rates went really, really bad. Now, they weren't rich, but they weren't so poor that they had to just leave and go and do anything else and have a better shot at feeding their family. That's just the reality of it. Another apologetic is somehow including manga, which is not a comic book. I don't know why, but that just keeps popping up. The secondary market for manga doesn't really exist like that. You don't make a profit; you're salvaging. That's what happens. You buy a manga for, $7 or $8. You can resell it for like $5. Right? That's your resale value. There's not a secondary market where you can earn a positive return. So if your goal was to buy it and then resell it for a profit, it's just not there. So they're not even sold in the same channel. They're sold in bookstores with returnability. Another one is the distribution channel. So I shouldn't use when they were at their peak in the 1940s before the Comics Code, since they moved into the direct market channel in the 1970s. This is ridiculous as a defense, because my argument is that's a terminal market from a business perspective, from an overall industry perspective. It's not the stuff you're hearing on the internet. This is closer to what actual real human beings think about it. They did something that was blatantly illegal. Like, you can go to ICV2 and read about the history of the direct market. When they started up, that was illegal. When people in the newsstands had returnability and they had to pay up, and then if it sold, then they got to keep that profit. But if it didn't, they got to return it. The direct market was a all sales final, that markdown of, about 30, 40% or something, like almost 50% sometimes, right? That's what it was. So instead of selling through a distributor to a newsstand, when the newsstand had returnability and all the honor system of that. Instead, they switched over to the direct market where the comic company gets 60%, 60 cents on the dollar of MSRP, and their secret was they just kept marking up the MSRP. That's why you have that secular increase, I mean generational increase in comic book prices, is that once they secured the direct market channel, they simply increased the price to maintain the profit flow that they had had before. So 10 cents for a comic in the 1950s translates into about $1.15 today. Meanwhile, the current MSRP for most comics is almost $5. But when you have the markdown, the comic book company is receiving about $2 and about $2.60, $2.70, $2.80. So they're getting the full dollar value that they would otherwise have gotten. So they're maximizing their profit, but the unit sales have gone through the floor, and I don't see them coming back to anywhere near that volume. There's not a logical way of getting there. Also, if I use the peak of the direct market sales, which were several, like it was almost 200 million, just as a broad swath, because there were a bunch of other distributors at the peak, and it wasn't just Diamond, and there aren't many sites that still have all those information, so I'm just putting that number completely out of the air. So from the very peak there, I would say plus or minus 40 million. Right, that's what I really think the margin of error is, that big. I still don't see it. The low was, I think, almost 70. I don't see it climbing back up to 100. Maybe I could see it from the very bottom of around 70 million. I could see it making it back to 130 in 30 or 40 years, maybe. I'm almost 40 now. I'm not going to be in the business like that at all. I'm waiting for Godot. Not at all. It, functionally speaking, long term is about 10 to 20 years. If you're buying and holding a stock, I mean, a long term hold is usually 10. But something like that, I mean, that's a generational hold time to hope that it gets to the point where it's back to where it was at its bottom, at its peak. I don't see it getting back to that. There were 10,000 comic shops when they were selling at their peak. There are maybe 2,000 now. And because it's a almost entirely direct market, I don't see them getting enough volume. And if there's not enough volume, there isn't going to be the optionality of there being a collector at the end of a speculation buy. This is just where it is. There are too many people who are just going to supply liquidity, and my lack of experience means I would spend a good period of time supplying liquidity before I understood the dynamics where I am. And the online marketplace, I'm just not going to do it when I don't think the industry is in a position that is not terminal. Thanks. I'll still make some videos here and there, but a lot of it's going to focus on finance and preparing for the CFA. Have a blessed one.